Hey guys, Michelle Kinney. Thanks for checking in. Thanks for checking out my video. I just wanted to share with you a quick trade that I did just a little while ago, about an hour ago. So today is Monday, April 7th, 2025. I haven't traded Intel in a while, but lately I've been creating some really cool technology tools that kind of like scrub different stocks and kind of like look and evaluate risk versus return. And I've traded Intel a lot in the past, and it is a big company. So here's what I did. And here's the idea for you. And I hope this helps, right? First of all, I do want to put a disclaimer out there. I'm not giving you investment advice. I'm just telling you, sharing what I'm doing. And, if it helps for you, that's great, but you make your own decisions, right? So I just want to throw that out there. So here's what I did. I bought 100 shares of Intel. I paid $19.30. That means if you don't use margin, if you're not using leverage in your account, you have to have $1,930 in your account, right? So if I pay $19.30 per share, I bought 100 shares, $1,930. Right after I bought the shares, I sold a covered call with a strike price of $19.50 that expires for this Friday. What does that mean? That means that between now and Friday, if Intel is $19.50 or higher, I'm gonna promise to sell my shares at $19.50. That's cool because I paid $19.30. That means I made 20 cents per share. I don't really care about the 20 cents per share. Here's what I do care about. The premium on selling that particular covered call was 1.7, meaning $170, right? So I have to have $1,930 in my account. I buy 100 shares. I sell a covered call. I take in $170. I can spend that money now if I want. That's cash. That's income in my pocket, right? If I annualize my rate of return out, like if I calculate, because I made $170 and I put up $1,930 and I'm only holding the trade for 4 days. Today's Monday and it's expiring on Friday. If I annualize my rate of return out, I'm making over 500% on my money. It's amazing. And at the same time, I don't use stops a lot, but on this trade I did. I put also a stop on the stock. What that means is Intel has been kind of like low, right? And it's been sideways for a while. The market has been down, right? Like, there's a lot of stuff going on with Trump and tariffs in the stock market. And I want to kind of like keep my risk tightened up, right? So the low for Intel, the 52-week low, has been $18.51. So what I did was I put a stop in at what did I put a stop in at 17.98, so a little bit lower than the 52-week low. And what I'm kind of sort of assuming in this case is that if Intel drops below its low, it could keep going. So I don't want to necessarily ride it all the way down. I don't trade Intel a lot. I'm just trying to make a couple bucks short term and get a high annualized rate of return on my money. So if it did get stopped out, and I put that good till cancel order on, if it did get stopped out at $17.98, that means I'm risking $131. But I just made $170 on the trade. For me, I mean, there's no like black and white, guarantees, right, with trading options. But you look at what's likely and what kind of rate of return can I get in with minimal risk? This is a fantastic trade. So I hope you like it. I hope it helps for you. And some people might say, well, what happens, Michelle? Okay, what happens on Friday? Let's say the stock is higher than what was my strike price? $19.50. I'm gonna sell my shares, right? What if it's lower? Okay, if it's lower than $19.50, I'm gonna sell another call next week and bring in more cash. So here's the thing. Here's why everybody should be trading options. Options give you like cash flow, gives you income, right? So when you just trade stock, like stock goes up, okay, that's great, but you have like gain on paper. Who cares? Can you spend that? No. Can I pay my rent with that? Look at this beautiful view. I'm in New York City. It's my new apartment here. It's I feel on top of the world. New York is the best city in the world, I got to tell you. But here's my point. My point is cash pays for your lifestyle, pays for the stuff that you have to pay for on an ongoing basis. So your stock account, like your paper gain, doesn't pay for that. So that's why everybody, if you're trading stocks and you're not trading options, specifically selling options, you are missing the boat. Anyway, this is under 5 minutes. I hope this helps. Thanks for watching my video. And if this helps, and if you want to know more, reach out and maybe I can hook you up.